Let's welcome our market master for the day, Gautam Chhaochharia, Head of India Research at UBS Securities. Good morning, Gautam. Thank you very much for joining us today. Well, we only have your old report which says your Nifty target is still 8,000. Would you want to scale it up now for a 6-month, say, fiscal 2015 kind of target? Do you think we are still in for more gains? Don't think Gautam can hear us.
I think there's some issue with that audio, so we'll try and get back to Gautam in just a bit. Before that, some more pockets that are looking good this morning. You have the jewelry companies from yesterday that continue to see traction. So PC Jewelers was up almost 20% yesterday. It's up another 5.5% today. And Marksans Pharma has been in the news. That stock is up about 2.5% or so. It's been a huge performer this year, almost 260% higher on Marksans Pharma this year, and that trajectory continues. But I think we can go back to Gautam Chhaochharia of UBS. Gautam, hi, good morning. Lata was asking you about your fresh Nifty target because we just have your old target of 8,000 and the market has now gone well beyond that. So for the next 6 to 12 months, what are you forecasting on the Nifty?
So we still have only one official target, which is the December 14 target of 8,000. And we haven't changed that despite markets going up, because we have written that markets can overshoot this fair valuation based target based on trajectory of growth, etc. From a next year perspective, what we have been saying is that we are very comfortable about earnings momentum to come back. So we are believers that earnings growth for the market, which for last 3 to 4 years for each year has been missing consensus forecast, and instead of ending at 15% growth have been ending at single digits. We do believe that those estimates will be met, and therefore that's the kind of return expectations we continue to expect from the market, assuming current valuations to hold. We don't have a formal forecast as such, but we do remain constructive in that context.
No, that point is taken. Actually, index levels would be something of a throwing of a dart since individual stocks could do very different things. But at the moment, the market's imagination is really captured by the mid-cap space, which, if I remember right, Gautam, you've been targeting for some time now. If I'm not mistaken, maybe 10, 12 months back, you spotted Crompton, Carborundum and Voltas for us on the channel when you came. Let's take those stocks yet again. Would you still look at Voltas? I mean, it has peaked off a bit from those 260 plus levels. Would you? Are you still bullish on these stocks, Voltas, Carborundum and Crompton?
Yeah, so we are still positive and have a buy on all these three names for the simple reason that they are cyclical stocks. There could be upside to earnings estimates as the cyclical recovery plays out, and we're already seeing signs of that in the last quarter estimates, when estimates were revised up and still the earnings beat those estimates. So that's a trend which we have seen in any cycle even earlier, and therefore we still remain constructive on these names. Now these stocks have re-rated. They're no longer as cheap as they used to be, but keeping in mind the earnings revision potential, and I would argue that they're still not in frothy valuation zone. So we're still constructive on these names because we do have high conviction on the cyclical recovery in India.
There is a very interesting theme in your report where you mentioned that interest rates are headed lower, and some of these asset financing NBFCs will benefit the most from lower interest rates. What are the stocks that top your list over there that still don't look very expensive at this juncture?
So quite a few of them, the entire space surely, but the top pick for us would be LIC Housing Finance. Beyond that, we continue to like Shriram Transport, and even the private sector banks which do have some exposure to wholesale financing, they will also benefit from this.
Okay. Well, Gautam, let me get back to the index stocks, the Sensex Nifty stocks. What would be the leaders from here on, say, for the next 6 months?
We would continue to bet on financials. The reason being financials valuations are still okay and reasonable in the context of their long-term history and in the context of related to the market also. So from here on, we would continue to bet on financials because they reflect both the recovery in the economy as well as our thesis of easing rate cycle. So financials is the top bet, and we like all the three parts, both of the private banks, the SOE banks, as well as the non-bank financials. So we like all the three segments. So financial is the big bet. The second, not necessarily for next 3 to 6 months, but over a 1 year period, we are bullish or continue to be bullish on oil and gas. Because again, the visibility on subsidies coming off and the impact on their earnings is a lot more clear to us. And I think the valuations are still okay compared to long-term history. They have done well over last 1 year, but that's off very low levels. But compared to history, the valuations again look reasonable. So these two are the bets we are making on in terms of the next 6 to 12 months. The sector, other big sectors like IT, pharma, consumers, we will still be relatively cautious. Again, in a bull market, everything does well, like you've seen historically. So it's not that these sectors will not go up, but relatively we'll bet on financials and oil and gas.
Okay. We were speaking with Saurabh Mukherjee of Ambit a couple of days ago, and he said that he's very bullish on the home improvement theme. And I noticed in your list, I mean, you've liked Blue Star for a long time, but you've raised your target price on that stock as well. Just tell us about that, and also are there any other stocks within this home improvement theme that you have spotted which you like now?
So home improvement has been a theme for us for last 3 years in terms of the mid-cap space. That's why we have kept on initiating and pushing stocks like Chhaochharias and TTKs, Havells, apart from the big paints companies like Asian Paints. But over last few months, specifically last 3 months, we have been downgrading some of these, because these again are very expensive valuation levels. So the business model and the business outlook remains very positive, but the valuations in our view seems to be pricing in TTK, Chhaochharia, etc. So you could look at selectively Bajaj Electricals and even Voltas and Blue Star to play this theme, because they also have the benefit of the cyclical business, which is not captured in the valuations. But broadly, the stocks in this space seem to be fairly priced in our view. So unless you're taking a 3-5 year view, when the near-term valuations become less relevant, from our next year perspective, these stocks look fully valued.
Okay, Gautam, just for to get this argument straight, while the market is certainly buying the cyclical story and buying those stocks, would you worry that credit offtake is now below 10%, that the deeply entangled problems in coal and power have not yet been disentangled? Even the start appears sometimes to have not been made. Is that a worry at all, or do you think all in good time?
No, that is a reality. I won't call it a worry or call it a good time, but that is a reality. So we are in the phase of restructuring the economy and correcting all the economic problems which we saw over the last few years. And that correction means the growth recovery will be much milder than some of the exuberant expectations on the street. So we have been believers in that. Forecast for GDP growth still remains 5.3% for March 15 and 5.5% for March 16. So we are in the camp of a milder cyclical recovery rather than a sharp uptick. And what you just mentioned about credit growth, investment cycle recovery, these things take time. It doesn't happen overnight. So sentiment obviously is turned around, but real economic activity will be much more gradual in its recovery.
Okay. Well, let me come to more mid-cap stocks which actually have caught the fancy of the market, the auto ancillaries. We were just speaking to Uday Mukherjee as well about it, 200, 300... Actually, Forgings is 500 or 600% higher. Is this space now, to be treaded with care?
So again, looking at the valuations, top down, the auto anks does look at the peak in terms of its past valuation ranges. From our coverage universe, we continue to like Exide in the auto ank space, but we don't have a buy anymore on Apollo Tyres or Motherson. Where we don't get comfortable with current valuations given the outlook which we have. So yeah, broadly the space does look fairly priced to us.
Okay, well, we have these queries coming in on our Money Control message board, and this time around is from an international investor. Premlal Tandon writes into us from New Jersey. So you're going to be catering to those investors as well, Gautam. He says that he bought shares of Havells at 250 rupees a share and now wants to know the outlook on that stock for the next 1 year. You just mentioned it briefly a while back, but what do you recommend he does with this one?
So we downgraded the stock about a couple of months back from a buy to neutral. We've had a buy for more than 3 years on that stock. But at current valuations, we don't see the risk reward of making money over the next 1 year. This is still a great business. The outlook over the long term is still very good. India is still an underpenetrated market. So as the economy recovers and we move on to a higher growth path, this stock will be a beneficiary of that. But from current valuation levels, from a one-year perspective, given where the estimates are, we don't think the risk reward is great to buy at these levels.
Mid-cap IT pharma. Over the past 8 weeks, I think the markets have also moved into these safe terrains, not just mid-cap, but basically pharma and IT. What are your pick of the pack?
So pharma we continue to like on a bottom-up basis, not top-down. Again, from a strategy perspective, top-down. We're not big fans of pharma at these valuations, but selectively bottom-up we do like. So we continue to like IPCA and Glenmark in the mid-cap space in pharma. IT overall, we are much more cautious now versus 3 months back, because the delta of positive surprises which we have been seeing for last year and a half has now turned, and we in fact saw a lot more negative surprises last quarter. So as a space, as a sector, we are much more cautious on IT services from a strategy perspective. In fact, we continue to have a sell and a neutral on Infosys and a neutral on TCS. So keeping that in mind, we're not really bulled up on the broader IT services as well as the mid-caps in that sector.
All right, Gautam, that's a wealth of stocks that you've given us today. Thanks as always. You have a great week. We'll see you again later on.